Okay, perfect. Thanks for the feedback, guys. You know, it's good that sometimes I'm asking for this type of questions. If the sound is good and if the video is good, I believe you probably hear me now. So thanks for the feedback. You should be able to hear me right now. So great. And okay, perfect. Okay, sounds good. All right. So what I said is that as usual on Monday in the The5ers Trading Room we do a weekly forecast. So we identify some opportunities on the market. It's the beginning of the week, so it depends. Sometimes it's very aggressive, sometimes it's very lazy. We had interesting move last Friday on the indices, which make a new high on the weekly time frame. So we're going to discuss about it, and yeah, I'm happy to be back on Monday. I think for already a few months, I was not here on Monday. I was only here on Tuesday. So I switch with Saul. I will be doing the weekly forecast right now, and it depends. Sometimes we will also change the lineup for the following week. So perfect. Hi everyone. Happy to see some people on the chat already. Before we dig into the market, of course, guys, it's important to me to remind. But if you have any questions in the chat, ask. If you want to interact with me, also ask a question. It's an open discussion. I don't want it to be you know speaking a lot for 1 hour. It's first of all it can be very tired for me, and secondly it's not enjoyable. I believe it's better if you ask some questions and if we can discuss about a specific subject. So that's why you're probably here. Good morning, Mike. Okay, let's move directly into the market. Okay, sorry for this, guys. I probably was speaking alone for doing the 2-3 minutes. Thank you for the feedback, guys. I think had a lot of feedback. Okay, I just changed the scene on OBS and then the audio just cut off. So yeah, sorry for that. I was just speaking that I was just explaining that the chart here on the S&P, on the daily chart, we are seeing an uptrend which is very clear. We are having higher low and higher high. Still, we don't touch the lowest, the extreme zone on the bottom. But again, on the daily chart, we see it. We see it very clearly that on the daily chart, it's an uptrend. If you go to the weekly, and this is more interesting here, this is why I explain it. On after the COVID, we had a big rally, big uptrend rally. Here, the market was overbuy. So there was inflation, there was recession, and the interest rates starting to hike, and then the market went down. Okay, so it's the beginning of end of 2022, and my expectation for 2023 would be that we will trade on a trading range. I already tell it maybe 3-4 months ago, and I still think I'm still on the same idea. Nothing changed on the macro environment side. Maybe the interest rate will not hike it anymore in US, but the consequences are still here. The inflation is still here. We didn't go back to the 2% per year. There are some consequences, but here, I expecting the price to again go back a little bit lower and then playing around here until 2023. Let me know, guys, on the chat what you believe. What will be for you the price of the S&P? It's quite the same for the US indices, but we will for this question be focusing on the S&P. What will be the price on the 1st of January 2024? Okay, so by the end of 2023, where you expect the price of the S&P? So give me an expectation where you see. Maybe you expect the price to again be on trading range and finish at the same price. Maybe you expect making a new high. Maybe you expect it to crack down and go back to 2000s. So let me know on the chat what your expectation for the S&P. It would be interesting to know what the difference in mindset. And of course, if you can also give a little explanation, it would be interesting to know what you guys think about. Again, guys, if it's the daily chart, no, let's say the weekly chart. Look where it will be the end. Okay, so you have all this place to go. So where you expect the price to be on the red line, you see on this line here. 4,300. Okay, so we are not so far actually from the opening. So you're actually expecting the price to be around here by the end of this. That makes sense for me. Again, I don't think we're gonna break a new high by the end of the year. So I'm on the same mindset. What will be the movement? I don't know. Maybe we can go back a little bit lower and then moving a bit higher. We can also make a big movement high and the market retrace here and then the price come back to 4,300. Again, that's my expectation. It will stop at the all high of 4,300. Yeah, so this is by the end of 2023. There are still some time, to reach there. And we had a big movement in volatility. So if there is, I don't know, an unexpected news happening, I don't know, on the stocks, and say, yeah, the stock market will go better because something happens, the price can do like you know, we are just only 3% down from the 4,300. So we're not so far from here. Alpha, you said that the Fed would cut interest rate and that will go above 4,300. That can be also, yeah, I think we already know that the Fed is starting to cut interest rate. They hike it very aggressively and they probably will stop. I think if I can show this, let me show you an interesting chart that I all the time show. So we have this CPI. Okay, CPI. Okay, CPI year to year. It might be this. Yeah. Okay, so it's the inflation now. I just want to show you guys on it. So it's the inflation rate in US year to year. So you see, we made the top here on July 2022. Meanwhile, okay, the Fed continued to hike interest rate, but we see clearly that the inflation has made the top here. Okay, so the inflation has made the top. We are still not moving back to the 2% threshold. For an healthy economy, the inflation rate should be 2% per year. Okay, and we are still like two times above, which means we are at 5. Again, we still see clearly the shape here of the top. You see the market starting to stop, make a top, and then it's actually technical analysis, guys. I don't know if you see this, but the inflation hike very fast, and then slowly getting back down to 5. We can expect return to 2, and then when we will get back to 2, the Fed will decrease interest rate, and we will see probably a boom in stocks. So that's what I think. Market up. Yeah, 4,500. Yeah, you know, that's the same zone that I believe the market will end. Let me move back to the chart. But yeah, the market will probably end in this area. It's a big area, but again, I'm not expecting the price to break a new low and to break a new high. This is the range I'm expecting to trade until the end of 2023. For traders that trades options trading, that I won't enter into deep details about what you can do in option strategies, but when you have a mindset that you say, okay, the price cannot go below this area and cannot go above this area, so you're probably selling options, selling a put, selling a call, maybe a strangle. Again, I don't want to go into deeper details, but this is the type of strategy I will do here. I don't know where the price will go by the end of the year. It's still it's an uncertainty. We don't know. Just me, what's your passing rate for the challenge model? You will give it a go. Again, we have 3 types of challenge. We have the instant funding, which is a one-step. Let's say we can call it a one-step challenge, but you get funded instantly. So it's the instant funding. We have the high stakes, which is the 2-step challenge, and we have the bootcamp, which is a 3-step challenge. Every program has its own mindset and on rules, on target, on drawdowns, on leverage. So it depends what program you are looking for. If you want to know what is the higher passing rate on the program, it's of course the instant funding. On the instant funding, we have around between 20 and 25% passing the first stage. Let's say passing the first level and scaling up their account. So this is the statistics. I'm very transparent, and I can also give you the statistics for the high stakes, which is quite the same in all the industry. It's around 8 and 9% for the high stakes. And for the bootcamp, because there is 3 steps and you need to be very consistent, which is 6% per stage. The rate is around 4%. Okay, so this is all you can look for. Again, it depends. It's not because the instant funding have a higher rate that you should go for the instant funding. maybe you're a very good trader and you can directly go to the bootcamp and show your consistency. So again, it depends. I'm just giving you the statistics. Statistics is not reality, so you need to differentiate here the passing rate. Okay, let's move on. We discussed about the S&P. If you guys have another question talking about indices and stock market and what's happening, give a short message on the chat. But let's move on the USD currency, and we'll move to the Euro USD. Which last week we see that the market did not succeed to break higher the 1.10. Actually, the market make a new high, but we see 3 times or even more than that, the market reject this area. It was on a big range, and then the market drop, and you see it's like a circle. It looks like the chart of the inflation. You see, so we moved up, we make the base, and then the market going down. Again, the market is at the mean, for example. You see, this is the big zone here. It was the bottom on January 2020. Here there was at least no retracement. Here we danced around and still here. So it's still a zone. Again, if you ask me what I should do for next week and what I should not do, so I will start at what I should do. I want to find some buying opportunities on the euro. Okay, even we are in a downtrend, as you know, guys. I'm all the time looking for market to retrace and to make the opposite move. Here, the opposite move will be for me to waiting for the trend to at least end, to play the inflection point here and expecting the market to go back. Again, we have quite here a clear downtrend on the H1, which is like this. So first of all, I will not make a buy here because we are at the top of the range. On the H4 as well, we are at the middle. So I think I will still leave it some days, but you see, this zone can be a good point for me, as you can see. Here might be a pivot point. Okay, we are not so far from this zone, but we will going to touch it very soon. So it's the 1.07 level when the market. Maybe I can go on the lower time frame. So you see here we had a top. There was here a news. We break it out to make a retest. So here for me it's a key zone. I'm waiting for the price to meet this key zone. We didn't reach the price yet. But what I think it's here a good zone because the stochastics in the daily chart is also below 20. Okay, so it's here also below 20. You see it's starting to cross. Again, it's not the most accurate point to enter, but when the price will move into this zone even deeper, I will make some buy opportunity. And we can see also here we have a demand. It's a short demand, but it's still one. So I will see when the market will go to that spot and take some trades there. So again, on the Euro USD, you need to be patient. Again, it's my own mindset. Some people will say, yeah, the market is on downtrend, so I will continue to sell. I agree. Maybe today it was a good point for selling. You see on the 30 minutes, like here, there was some divergence probably for the price. You see triple top here, and it's exactly touching the. You see we have this zone, and then you have probably this zone, triple top, and then you have all this trend line going down and so on and so on. So yeah, I believe on the short term you can still sell it, but you need to be careful because we are approaching a new big demand zone. So yeah, try to appropriate your trade and all the time put a stop loss. Don't wait for the market to move without you. So that's for the Euro USD. And again, I think we just moved back to the average price of the Euro USD. I think when I was young, maybe 5, 6, 7 years ago, the price of the Euro USD was all the time between 1.05, 1.07. We just go back to this average. You see all this all this movement here, where during at least maybe 2 years, the Euro USD was trading between 1.10, 1.05. You see, so it was a very big range. Here it was the COVID. Euro USD pushed to 1.20. Okay, and then all the move back below 1, and then again we are coming back to 1.08 again, which is for me the standard price for the Euro USD. It's quite an historical price. You see, if we go back to the last to this range, which is 2014, and we find it as a range, the average is around 1.12 or 1.10. So for people that use data analysis, you can try to take the last 5 years and try to find the average price for the Euro USD, and we are not so far actually. So the market is starting to move back again to the range, which means we are in a normal stage of the cycle, which is interesting. In opposite to between 23 and 2014, when the price was ranging here and the average price was 1.40, which is a very big different period. So you need to identify when you do like some back testing and some you back test your strategy, and you say, yeah, I made a back test over 20 years and my strategy was profitable. Okay, but maybe the period you take on the 20 years was all the time different, and you need to identify all the time period, which is very important. I think what is interesting is that we had someone, a trader from the 5ers, coming from Japan here at the office. I don't know if he's here on the chat, but he come here at the office. So if you guys coming close to our headquarters in Tel Aviv, in Israel, so yeah, come to the office and we share a beer together, small cup of coffee, short discussion, talking about markets and strategy. And last week we had a guy coming from Japan, because I think he had a business meetings, and we had a very interesting discussion about markets, and especially about like the history, when you need to identify if it's a chaos environment, or if you are in a recession, or if you are in inflation, and all the time you need to separate the random movement in the market and the non-random movement. So it was very interesting, and I think you need to take this type of movement in Euro USD as an example if you backtest. You see, so we are here. From 23 to 2015, we had a cycle which is quite very identical, very similar, and then when we break the 1.20 level here, we enter into a new range, which is from 2015 into 2023. So interesting. Let's start. What you mean for Bruce? Okay, so this is for the Euro USD. Maybe New Zealand dollar. Maybe we have interesting move there. Oh, okay. I know what I want to show. Maybe Euro Swiss, which was very interesting. The market is still on a big downtrend here. Yeah, I'm still looking for some buys here on the Euro CHF. Again, stochastics starting to cross below 20. You see that we are losing momentum. Sellers are losing momentum, and we are approaching a big demand zone. I think the lowest point historically on the Euro CHF is here. It's a bit far, so you need to take your precaution if you want to open a big swing position here. But I think that's what I should do on the long-term portfolio, starting to buy euro against Swiss pairs. Again, I'm expecting the price to go back to average. You see, it's the cycle, and the average is around here. Okay, so when you touch the bottom of the range, which here it's quite clear, we see it very clearly. The range is horizontal. Again, expecting the price to a little bit move back to the average, and here we have another meeting crossing points I did not get notified. I think yeah, you probably get a notification that the trading room will start. I will check it with the marketing team why you did not get notified. But yeah, we start as usual 9 a.m. Eastern time. Sometimes, generally we are not late. So 9 a.m. Eastern time, Monday and Tuesday here on this channel. Yeah, let's go to Aussie CAD if you're already asking. One hour look interesting. Again, I start by looking at the big time frame. Here, it's quite again a big key zone on the daily chart. You see we had a lot of retracement here. Here we had retracement, and then we go back. We already had a lot again of buyers coming down here. The fact is, the more you touch this zone, the more it's have chance to break below. Again, I will never like selling the market here because we are in a big support zone. And on the H1, I actually don't find why you find it interesting. Maybe it's a downtrend on the H1 chart. I think we see it very clearly. We make a lower high and lower low, but maybe on lower time frame you find it interesting. Yeah, maybe here. On the 30 minutes we have like an uptrend starting to create. Again, I will not look for any selling points here because we are again in a demand. Of course, if you look for lower time frame, I think it's a nice spot to go with the trend and selling the market right now. But again, when you go with the trend, you need to exit at a very accurate time. It's the more difficult things to do. Because here, again, we are still expecting the market to go down. I'm expecting the market to go down. Again, when the market will stop, I don't know. I prefer to wait a signal for me to open a buy. But yeah, in fact, interesting movement on the, I would say, M30 minutes, which make the opening here. We have the opening here. We see the spreads opening. We make a lower low in the London session or Asian session. I don't know which session it was. Yeah, it was the opening of the London session, and then we are again pushing up, and then the markets. We probably try to break it down. So this was interesting. Upon the end, I think it's also a big purge recently that moved a lot. Again, looking at this chart, you probably would tell me, yeah, it's a big uptrend. I would try to find a buy. Again, I have a contrarian mindset, and I will never buy these type of assets when the market is from May 2020 moving up already 36%, and it's important to remind we are in a forex market. Of course, the cycle can change, but most of the time the market will continue the cycle. It's not like a crypto where the market can make 1000% in few weeks. Here we are in the forex market, which is a more stable market. So again, this is mainly why I won't open a buy here, or even the same even here or here, because again we are the market is still on the zone when the market can have a rejection. So sometimes I agree I can miss some opportunities on forex market, but this is or I think all the time. I'm looking for the market to move down here. I don't know when, I don't know how, but if I want to do something here, it's only selling. We are still at the top of Bollinger Bands. On the H1 here to markets, again, it's very different between the H1 and the monthly chart, but I will be looking for selling all the time. So sometimes I will be for a few months in trouble because the market will all the time push against me and I will need to manage my position. And sometimes the market will like drop like a plane is crashing, you know. So okay, it depends. But again, on the H1 chart, we see the uptrend. It's like it looks like very clear here. The market just opened, so let's move back to maybe we can see the opening on gold together. Gold is crashing down also. You know, it's quite the same mindset here. You will say, yeah, the daily chart is a big uptrend, and you go also if you go to a weekly chart, big uptrend, very very cool. The price of gold is pushing 25% in in 4 months, so I will probably make a buy here. I will be the last guy to buy, and then the market is already identifying the weakness in the momentum, and then the market will move down. And again, there was a lot of people will say, yeah, gold will make a new high, but again, it's not the time. And if you bought actually gold here, okay, on 1,800, that's fine, you can hold it. But for people that buy it around 2,000 or 1,950, or you know, this zone, you are buying at the worst spot possible. Again, it's my opinion, and it's the same in the pound yen. You know, big uptrend and then coming into a zone. Again, gold is a different behavior in terms of economy and what's happening right now. But this is just to demonstrate again the mindset I have. And again, here it's yeah, looking for selling. I will also sell here. If you look at the weekly chart, we are at the top, Bollinger Bands. I'm also looking for a sell. And on the daily chart, we have quite here a nice bias. Okay, we had a long support line touching in multiple time. Of course, 1 time, 2 time, 3 time, 5 time, 10 times, and then here market break. Okay, so more time you will touch the zone, more time the demand will get consumed. The market make a retest here, and you see on the H1 moving back to this zone, and here already sellers coming back. Okay, and then again I expect today to the market to make a lower low on gold. I think there is quite some place here to go. If I at least to come back to the lowest point. So there are still some movement to go. There are 1% down. So I see 1% down, 1% drop in gold. And if the market is like more aggressive, we can at least go back to the middle demand here, which, you know, you have still some space. So here there is quite a nice spot to go. So again, M5, you see, big flag, big base. If you want to sell it, try to wait maybe for the price to come back to average, make a compound entry, don't enter like blindly on the market. Again, if you still want to be in, so you open a small position, like you open 0.2, 25, depends again what's your balance and what's your capital and how much you want to risk. So I won't enter again into a deeper calculation. On Monday, we just try to show a clear brief on how the market can move and how we see it. But yeah, here we already have a nice reaction. Stanley, thank you very much for the feedback. Appreciate. Thank you. Okay, S&P. Let's move back. It's the opening right now. I think the market is pushing very well. Maybe we're gonna see a new high on the weekly chart. Why not? Interesting. We had a base here, then drop during the. It was on Friday. Yeah, Friday drop maybe during the news. Here again, opening very quiet London session. Let's say pre-market. You know, very quiet. I can try to find a spot to make a short sell here. If the market continue to push very drastically, I can make a short scalp. I will need to see how the market react Again, here I'm not expecting the market to drop like and making a lower point at the base here, but at least looking for the market to retrace a little bit. So maybe here at the supply, at the top of Friday. We'll compound it a little bit. Okay, let's compound the entry. Again, it's a scalp, so I want to repeat, my take profit will be around this zone or even this zone. Depends how I compound my entry. The stop loss should be above the high, which should be, you know, here. I don't want to risk more than that. If the market push a little bit against me, I will already be out. So let's try to find how the market react. Here I open a sell because we were at the bottom. You see the bottom of here, and I will try to have another a sell at the top, and we will probably take the profit not so far from my second entry. So we'll see how the market behave. Maybe Euro yen can be interesting. Let's check. I can probably open another bulk here at the top. Yeah, so we will have here some action. It's quite a quick scalp, a bit risky, but feeling comfortable. When you have a big open like this, you know, going far from the mean very drastically, most of the time the market, you know, retrace, you know, make some retrace and then continue the movement. We will see how today the market react. Maybe the market would like to make a new high and continue, but it will be without me. But here I'm quite comfortable by, you know, having several entry, one at the bottom of the zone, one quite at the top. Maybe we can sit on M1. I want to already take the profit around that zone here. The market come back here, that makes sense for me. Yeah, I also see here that the market will continue on that trend. See, we have a base here. It was an uptrend. Here the market created demand, but I'm expecting here a short scalp as the market opened very, you know, big movement at the beginning, the opening. At least I'm expecting some retrace from the latest weak zone. So we'll see if the market react already here. I'm expecting already that the market here, you see between this rectangle here on the M15, just get rid of all the line to make it even clear. At least here the market should make some retrace. Here the market continue quite drastically. That's why I opened the first sell. But yeah, I'm not expecting, again, I want to repeat, guys, I'm not expecting the market to move back to here, for example, as the trend is quite clear here. It's doing this, see. So yeah, it's a triangle. It's like the same as you mentioned. It's a triangle moving from here and then here. So it's a ascending triangle. But again, as long as we are moving back to maybe here, so I will be fine. It's a bit hot here. It's not working, this. Okay, so we have the reaction. We have the reaction here. Again, the mean on the M1 is here for me, so we'll still need to look at exiting some of my position at the mean. I can already close the first part. It's only a nice reaction. Yeah, I'm exiting the first position that I open here. I will take the stop loss very closer to the top here, and I will take the second part closing just below. I can also close it to break even or close half here. Here you see the volume is very minimum, so I won't manage it as I have a big volume, but that would be also something possible. If you have a big volume here, you can always like exit partial exactly at the mean at the M1 here. For people that use Bollinger Bands, it makes sense. Yeah, I can already move my stop loss even closer to already close some profits in my hand. Okay, I just closed the trade. So this is the type of scalp I'm generally looking for at the opening of the US markets. Again, the scalp is finished, and you see we didn't even touch the lowest part of this like triangle. Again, it's looked very bullish on the 30 minutes or H1, but I succeed to find a spot where you can sell at the opening. I will not do this all the time, but when you look again in my vision, when I look that there is a big movement at the opening, going far from the mean, I would be starting to open some scalp and take these type of positions. It can be risky, can be not, depends on how you manage the trades. Again, from here the market can continue, make a new high, I don't care, and that's fine. Okay, the camera just turned off. Maybe let me check that. Yeah, I'm probably back. Okay. I'm probably back here. Okay. That's fine. What's happening on gold? Same spot. Anyway, we just approach the end of the session. So again, I appreciate. Generally, we don't do this type of trades on Monday. It's like more weekly forecast when we talk about the news and we talk about the opportunities and what we see. But I like to go like a bit freestyle and try and talking about the market, finding an opportunity. As a trader, you have your emotions and you have your mind saying, yeah, why not moving it on the market right now, and then we do it. So yeah, again, it was interesting. Here had some nice spot on the S&P, obviously today. Again, for gold, expecting the price to continuing the trend on the bottom side, maybe going around 1,960. 1,950 for the following week. The Euro USD, I'm looking for some buys, some buying opportunities. Not right now. I need to find my accurate spot. But yeah, that's for you today, guys. So again, appreciate you being here. Tomorrow again, trading room at 9 a.m. Eastern time. So same hour. And Saul will be here instead of me. Again, so like I said, we will try to change a bit the schedule, let's say the lineup. So I will be for Monday making a weekly forecast and talking about the markets like on a bigger scale, and Saul will like taking active trades on Tuesday and tomorrow. So again, I invite you to be there tomorrow. Again, for people that don't know or still don't buy the tickets, Traders Day Live on June 17th of June in London. If you are from UK, you don't have any excuses. Book your tickets and come to see us. It will be a very nice event for you traders, and all the team will be here. Traders from all over the world will also come to this event. We have already some US traders coming in and traders from Asia coming in, so it's going to be very nice. So yeah, interesting. Again, guys, have a very nice week. Take care of you, and see you next week for my part. Thank you, guys. Goodbye.